Stocks. Most people hear about them, but very few actually understand them. They see dollar signs, they see the potential, but they just can't wrap their heads around how it all works. Well, we're here to change that, because in this video, we're going to break down exactly what stocks are, how they work, and how you can get started investing in them today. A stock is a little piece of ownership in a company. That's it. When you buy a stock, you become a shareholder. You own a tiny slice of that company. As the company grows, so does your wealth. Let's take Apple, for example. Back in 2003, if you had invested $1,000 in Apple stock, which was trading around $16 per share at the time, that $1,000 would be worth more than $40,000 today. In other words, your $1,000 would have turned into $40,000 just because you owned a small piece of a growing company. But stocks aren't just all sunshine and rainbows. Stock prices go up and down every day. That's normal. But to the wealthy, those ups and downs are nothing new. They don't freak out when the market dips. They see it as a buying opportunity. Why? Because they're not trying to get rich quick. They're building wealth over decades. Stocks are one of the best ways to build wealth over time. Now let's talk about the two main ways to make money with stocks. First, capital gains. That S, when you buy a stock at a certain price and then sell it later for a higher price. Say you buy a stock for $100 and it goes up to $120. You can then sell your stock and pocket the $20 difference. That's a capital gain. The second way is dividends. Some companies share their profits with shareholders. They call it a dividend. Imagine owning 100 shares in a company that pays a $2 dividend per share every quarter. It's $8 a year paid to you just for holding their stock. It's like getting paid to own a piece of a company. Now that you know how stocks work, let's talk about how to get started. Step No. 1. Choose a broker or investing app. There are plenty of options out there, but it's important to find one that you trust and feel comfortable with. Do your research, read reviews, and choose a platform that fits your needs. We've got a solid list of recommendations if you need it. Step 2. Start doing your research. Look for companies that you believe in, companies that have strong profits, innovate often, or have great leadership. You can also look into ETFs, which are baskets of stocks that trade like a single stock. ETFs are a great way to diversify your portfolio without having to buy individual stocks. Step 3. Diversify. Spread your money around and invest in multiple companies across different sectors. If you want to play it safe, consider ETFs. They offer instant diversification and are a great way to get started. Look, stocks are one of the most powerful ways to build wealth, but the key is time in the market, not timing the market. Don't try to guess when the market will go up or down. Just invest consistently and hold for years. Let compound growth work its magic. Now, we know what you're thinking. What if I lose money? Well, here's the thing. The stock market has historically gone up over the long term. Yes, there are ups and downs in the short term. But if you zoom out, you'll see that the trend is upwards. Plus, if you invest in a diversified portfolio of companies, you're even more protected against short-term fluctuations. Sure, there's always risk when it comes to investing. But that's why you should only invest money you can afford to lose and stick to a long-term strategy. So don't let your money sit idle. Invest it. Watch it grow. Build that life you're after. Don't. The wealthy don't just get lucky. They understand the power of stocks, educate themselves, invest wisely, and let their money work hard for them. And you can do the same. And remember, this is not financial advice. We're just here to provide education and inspiration. Follow us to stay motivated and keep learning.